The Manhattan real estate market is experiencing a period of significant recovery. Although the inventory is still substantial, sales activity has exploded and the COVID discount effect is already disappearing. It should be remembered that these data are somehow still influenced by the pandemic, as they reflect the difference between this quarter and the same period of last year. Talking by the numbers, let's try to put things in perspective. The number of closed sales was up 150% from the year-ago quarter, the most significant jump in sales since 1990, a very encouraging signal and an indication of newfound market confidence. The median sales price was up 13% year over year to over $1.1 million. This is the highest level of the last 2 years. At the same time, the average sales price was up 2.1% at over $1.9 million. The numbers were slightly skewed by the tendency to buy more spacious properties during last year's lockdown. The average price per square foot was over $1,500, down almost 6% from 12 months ago. This is a sign that opportunities are still there. Now, an interesting fact, this quarter the resales comprised 90% of all sales, and their average price per square foot declined 3.6%, which is a reasonable proxy for a COVID discount range from 3% to 5%. However, in the first quarter, this metric was 9% for a range of 7 to 10% discount. So this is a clear sign that what was a COVID discount a few months ago is starting to become a very small discount, and it's starting to disappear. With the number of sales rising faster than the listing inventory, the speed of the market is picking up with the months of supply indicator that fell 50% from a year ago. It reached 7 months, while days on market was 169, 36.3% longer than the previous year, as the market has absorbed older inventory. So these homes that we find in this metric, 169 days on market, were the homes that went on the market in the second half of last year, and they lingered on the market through the end of the 2020, while in 2021 things changed dramatically. Other encouraging signs for the Manhattan market are the listing discount. The percentage difference between the list price and the time of sale and the sale price was 6.4%, down from 7.9% a year ago. The market share of cash deals came back to, let's say, normal levels for the city, which is in this case 45.7%, consistent with the 46% share that was recorded in the first quarter of 2020, so just before the COVID crisis. Finally, the market share of bidding wars, defined as properties sold above the listing price, was almost 7%, which is a good improvement from the last year point, which was 3%, but still far from the peak of the market in 2015, when the share of properties sold above asking price was 31%. This is it for today. Call or text me at 917-214-2509 if you have any questions. I'll see you on the next one.